Yes.
Yes, sir.
Hello. Yes, Smriti and Zarina.
Yes, sir.
Yeah. Okay.
Uh,
So like if in MACRS, let me explain this small example and wind up. Let the recording start 2 minutes. चेयरमैन का मतलब वो पूरे बोर्ड को रिप्रेजेंट कर रहा है और अगर सीईओ बनाने के तो कंपनी के सिर्फ कंपनी के बिहाफ से ही सोचिए ना ओवरऑल नहीं सोचिए ठीक है so अगर independent director is appointed he has the meetings of independent directors separate from meetings of the yeah. So that MACRS depreciation, the amount of depreciation to be taken for each year for an asset with original cost of 90,000. Just a second. So there is a question here. The amount of depreciation to be taken for each year for an asset with an original cost of 90,000 that is being depreciated as 3-year property using MACRS, and the half-year convention will be as follows. So the rates are already given to you by the IRS, the Internal Revenue Service of United States. So they say whenever it's a 3 years asset, you have to depreciate it for 4 years. Correct? Half in the first year, half in the last year, first year, last year, and then in between 2 years fully. So these are the percentages you need to apply and you need to depreciate the asset. So they have done the same thing. They have applied the percentage and to 90,000. The amounts are in front of you and they depreciated it 100%. Okay. So this is what. Now, if you use straight line depreciation for tax purposes, yes, sorry. Yeah. So if you are using depreciation for tax purposes, so what? See, straight line depreciation can be used for tax purposes as well. However, straight line depreciation for tax purpose is different from straight line depreciation used for financial reporting under US GAAP. Okay, you prepare financial reports at the end of the year. There even you depreciate your asset based upon straight line method. And when you prepare a tax return, when you file a tax return, there even you have to depreciate your asset with straight line method. So the procedure here is different with when compared to this. Why? Because here US GAAP is what you follow. Here you follow the tax codes or rules. Okay. Now, if straight line depreciation is used for tax purposes, this important point you need to understand: do not subtract the salvage value to determine the depreciable base for the depreciation to be reported on tax return. So here in case of the income tax, excuse me, excuse me. Yeah, here in case of tax filing, tax returns, when you prepare a tax return, the straight line depreciation treatment should be given as per the tax codes or rules. So what the tax rules say that if you want to find out the depreciable base, so depreciable base is nothing but, or tax base is nothing but, or when we used to prepare the financial report, we used to find out the depreciable base as what? Original cost minus scrap value or salvage value. Okay, so we used to remove this and the leftover part we used to depreciate. But in the case of tax returns, when you file a tax return, you should not subtract the salvage value to determine the depreciable base for depreciation. Why? The depreciable base for tax purpose is always 100% of the assets cost. That means as per the tax rules, the depreciation whatever you are going to calculate on an asset, the asset value should not be deducted or subtracted with this scrap or salvage value. That means after deducting the scrap value, you should not take the asset. You should take the asset before deducting the scrap value or salvage value. Okay. So 100% you should take the asset, and that 100% asset is considered as depreciable base. Okay. Just give me a minute. Excuse me. Just give me a second. There's someone, so I'll just start within 5 minutes. Okay, sorry for the interruption. Just give me 5 minutes. I'll be back. 5 minutes. Yeah.